Trump, terror, and the Trillion-Naira Shockwave, how one threat shook Nigeria's stock market. A Naija Mirror special report. Every nation has its breaking point, but sometimes that point isn't a bomb, a recession, or a coup. Sometimes all it takes is a sentence, a single threat, a single statement from thousands of miles away. And suddenly the Nigerian Stock Exchange begins to bleed, banks tumble, oil stocks shake, the Naira trembles, investors panic, billions evaporate like steam from hot rice. Recently, Donald J. Trump, U.S. President and current global wildcard, dropped a political grenade into Africa, a threat of possible military action in Nigeria, and the markets heard it loud and clear. This is the story of how one geopolitical shockwave created a trillion-naira tremor. This is the Naija Mirror, where truth has no diplomatic passport and power has no hiding place. It happened like thunder on a dry day, no storm, no warning. Trump, during a rally, hinted at possible military involvement in Nigeria, using terrorism as the justification. One sentence, one headline, and global investors, the people who move billions with a swipe, did not wait for clarification. They reacted instantly. Stocks dipped, foreign investors paused, bonds slipped, the Naira weakened. Why? Because in the world of international finance, uncertainty is poison. It doesn't matter if the threat becomes reality or not. What matters is the fear, the doubt, the question mark it plants in the minds of investors. Is Nigeria safe for our money? That question alone is enough to trigger a sell-off. Let's break it down in simple Naija talk. Foreign investors control a massive portion of liquidity in the Nigerian stock market. And these investors hate three things. 1. Geopolitical tension. 2. Currency instability. 3. Policy uncertainty. Trump's comment touched all three. 1. Geopolitical tension. A threat of U.S. military action anywhere is a global incident. When it involves Africa's biggest economy, the world takes notice. 2. Currency instability. The Naira is already shaky. Any international tension makes foreigners fear further depreciation, so they run. 3. Policy uncertainty. If geopolitical chaos breaks out, companies struggle, government struggles, economy struggles, and investors hate struggle. This is why the Nigerian market reacted the way it did. Let's be honest. The market was already stressed before Trump opened his mouth. High inflation, weak Naira, capital gains tax concerns, profit-taking after earlier rallies, low foreign reserves, political tension, and rising insecurity. So when Trump made that statement, it was like pouring kerosene on dry firewood. The dip wasn't caused by just one issue, but Trump's threat became the catalyst, the trigger, the final push that turned weakness into panic. Stock markets don't collapse gently, they fall like dominoes. One big investor sells, another copies, a third panics, retail investors follow, prices crash. Fear spreads faster than truth, faster than policy, faster than reassurance. That's how Nigeria lost trillions in market value in days. Not because bombs dropped, not because soldiers marched, but because investors feared what could happen. In finance, perception is reality. Whether we like it or not, foreign investors see African markets as high risk. So when a Western power threatens military intervention in an African nation, the effect is multiplied. America coughs, the Nigerian stock market catches cold. This is the geopolitical imbalance Nigeria has been trapped in for decades. Here's the truth. The chances of full-scale U.S. military action on Nigerian soil are extremely low. Why? Nigeria is Africa's largest democracy. Oil and strategic interests bind both nations. The U.S. needs Nigeria for regional stability. Military action would cause global backlash. Diplomacy is still the primary channel, but markets don't wait for reality. They react to headlines, predictions, fear. And Trump's rhetoric created the perfect storm. Nigeria has been through worse: recessions, coups, oil crashes, political crises. Yet the stock market always finds a way to rebound. Here's why the rebound is likely. 1. Panic sells off fast. Recovery sells slowly but surely. Once fear settles, prices look cheap. Investors start buying again. 2. Nigerian blue-chip companies remain strong. Banks, telecoms, consumer goods, and energy firms have solid fundamentals. 3. Foreign investors love bargains. Once the dust settles, they re-enter the market and push prices up. 4. Geopolitical storms rarely last long. A single statement can cause a dip. A single clarification can trigger a rally. 5. Market corrections are normal. Even in the US and China, stocks dip on fear and recover on clarity. Nigeria's market may be bleeding, but it is not broken. Nigeria's economy sits in the middle of a global chessboard. Every move by the US, China, Europe, or Russia affects us. We must build internal strength, not depend on external approval. We need stable policies, strong institutions, a predictable Naira, honest leadership, investor confidence, peace and security. Real economic reforms. Until then, foreign headlines will continue to shake our markets, but the Nigerian spirit remains unshakable. As Nigerians, we cannot afford to watch our future controlled by foreign voices. We cannot let fear dictate our economy. We cannot let global politics decide our destiny. The market may dip, but it will rise. Money may flee, but it will return. Confidence may shake, but it will stabilize. Hope must remain. This is not the end of the Nigerian market. This is just a chapter in its story. And when the dust settles, when clarity replaces confusion, when politics gives way to policy, the Nigerian stock market will rebound. Stronger, smarter, more resilient. This is the Naija Mirror. We don't just tell stories, we tell the truth behind the headlines. If you want to understand Nigeria, if you want to understand power, if you want to understand how global decisions affect your pocket, subscribe to the Naija Mirror, where every episode reveals the truth, and every truth demands accountability.